Next Level Live. Very excited to listen to Wayne Carr and Paul McClain and Josh Rose. We got a great lineup for you today. And I want to share a couple things that I got out of a meeting this week. You know, we had an amazing group of people come in from the West Coast, 10, 11 people come in and really got to talk to them about production. And really, we talk a lot about building and how we help get agents started. And one of the things I think that it's kind of funny because I said, what do you guys talk about in the first 30, 60, 90 days? So if you're in your first 30, 60, 90 days, or you're hiring agents, they're going to be in their first 30, 60, or 90 days. What is the goal? You know, what are you looking to do? What are you looking to accomplish? And it's funny because we've been saying this now for a year. You may or may not have heard me say this, but when I got my license, you know, and I started rolling, I didn't really have anybody tell me what they thought. You know, they didn't really provide me any structure, and I need to make money, so I just went to work. You know, and one of the questions they asked me was, "What do you do with part-time people?" And I said, "What do you mean What do you mean? What do I do with them?" I'm gonna be more specific as far as their goals. I said, "Well, full-time people, you know, first 30 days, 10 grand is paid a month. Next 30, 15 grand is paid a month. By the end of 90, 20 grand is paid a month." Anybody can do it. We have plenty of people that do it all the time. So it's not, I mean, it's very, you know, 40 hours a week, 30 appointments. If you meet with 20 and close 10, none of those are phenomenal numbers. And then just 10 individuals, 1,000 hours apiece, you're gonna write 10 grand a week and simplified issue life insurance. That's pretty self-explanatory. But for us, it's really, you know, I said it depends. Like when you look at what Eric Schmidt's part-time was, that was what my part-time was. I worked my job as a social worker, worked real estate, and I worked every single week. And I said, one of the things you have to start by saying is, hey, if you're looking to change your situation, it might suck for a little bit of time. You know what I mean? If I say to Meike, if you walk in the door tomorrow and go, hey, I got a full-time job, it's not cutting it, I need to move, I need to do more, I go, all right, are you ready to give up more time? Because you're still going to keep your job, Meike, and then you're going to sell life insurance with us part-time. Part-time to me was Saturday, Sunday, 12 hours a day, 24 hours a week. That was my part-time for, you know, a year and a half. So it all depends what you're looking for. But I think what I gleaned from everybody that was here was, I was gonna be more focused on what I do and work harder. And I know there should be a better answer, right? Like I heard, hey, my lead strategy, I changed that. I started getting, you know, different kinds of leads, and I was very diverse in my lead approach, and that helped me, you know, do better. And then I heard people talk about the things they did in the house. You know, one of the things that, you know, Conrad Plowski, Conrad been here for a long time, great guy, tells me a story about meeting with a client who already had an agent there, and how he just kind of said, hey, you know, matter of fact, when the guy kind of got done doing his deal, Conrad's like, okay, sounds good. Client happened to be a smoker, we got Americo, so he's able to kind of go, hey, let me show you this. And he said, I wouldn't have done that years ago. Maybe I wouldn't have done it a year ago. Really getting, when you're changing, you know, I had a guy say to me, he goes, man, I do a call for that group every week. He goes, the calls are getting a lot better, thank you. And I go, thank you, I'm trying to get better every day. Not like, what was wrong with them before? I'm trying to get better every day at what we're doing. We're trying to take on and see what people are doing. So that's some of the things that you see from us. You know, we've never put more money into marketing the company, Meike. We still continue to break records every week hiring. We are breaking production records every week. So we have awesome producers. We have more than enough leads. We have more than enough. I mean, you know, we're selling more Reliance Shield. You see MedSup, Med Advantage really starting to grow. Immeasurably, which is really great. So you get to see that. Chantel's done an awesome job there, helping folks out and getting them going. So you can certainly reach out to her. We're hiring other staff members, going to do some backup, some contracts. So we're putting more into it than we ever have because we see where it's going. You know, my mother, you know, Meike, on Thursday she called me up. I don't think I told you this, and she said, I just got laid off. My mom's been there 22 years. And it's hard, right? I got laid off. And I said, what's your severance? Seems like a good question after 20 plus years at the company. And she says, I don't have one. They're paying me until Friday. Mind you, this is on Thursday. This is yesterday. They're paying me until Friday. And my medical is good until the first of the month. Now I get angry because she's my mom, right? I'm like, that's, you know, and company's got, I'm not going to comment on that, what they were or weren't doing, or what the downfall was. It's their business or what they're doing. But I thought, you know what's pretty cool, Meike, is if my mother had called me in 2007, 8, 9, 10, 11, or 12, and said that, and prior to that, I would have said, sorry, good luck, finding a job. And what's neat in this business, and I'm preaching to choir, there's many men and women that work with us and do the exact same. They have all out of awesome stories. But I can just go whatever. Like, what do you care? Pay for this over here, pay for this over here. You don't have to do that anyway. Need some medical, I'll pay for that. Like, whatever you need, because you're my mother and you raised me and you did most of that stuff like killing it by yourself. You were a single mom. So, and I think that's the thing that we're starting to get people to understand is they're not just living for today. Living for today is the way a lot of people get manipulated in capitalism. Hey, work your job, take a weekend off, spend all the money you got, start over again on Monday. Complain about it all week long. Numb yourself on the weekends, whatever that means, just hanging out, working out, drinking too much, whatever that means. That means something different to everybody. And here we're like, let's help people truly get ahead. Let's help people think about what their lives can really be like. Let's help people think about making a real difference in the world. And for us, that's where we're at. We're in a place where, so when you see people, and I go through to a man or a woman that was in here this week, how many hours a week you work? 20, 18, 24. The top people in the company, and I'll pass it over to Wayne with this, the top people in the company do two things great. There's probably other things, but they all do two things phenomenally well. Top, I bet 100, 200, 300, whatever the cutoff is. And even at 500, they do it better than the people that are top 1,000. They work 40 plus hours a week. Now 42, 45, but they work 40. They minimally work 40 hours a week. Do I think we have a lot of people selling 56, 70 hours a week? I do not. But I think they work 40 hours a week. I think they think that's what a full-time job is. That's what they're used to. They would feel weird and awkward if they work less than 40 hours a week. And they're trying to get to work 40 hours a week. And they're consistent in everything, but most importantly, their leads. They're consistent in every single aspect of the business. Most importantly, their leads. They don't get frustrated. Now, all those things are help you avoid everything else. You don't get emotional when you have enough people to meet with, and you work enough. Don't get emotional. There's no reason to it. There's just next. Give me my next appointment. I'm good. You don't get thrown off by things you can't control. You don't try to move immovable objects. Get to a house and a client spends 3, 4 minutes, 5 minutes telling me how he don't want to do it, even though he filled it out, and I do my thing and still connect with him, and I'm 10, 15 minutes into it. It's okay. I'm going to get a few immovable objects during the week. I'm good. Move on to the next one. No different than agents. If I have enough agents to talk to, I'm not sitting back going like, man, what am I going to do? How can I convince him to do it or her to do it? How can I convince them to come work with us? We're not doing that. We're in a place where we continue to see our platform be the best in the space. And if we're going to be the best in the industry, we're going to act like it. We're working hard every day to be better and to put ourselves in a better position to win. Sales conferences, the feedback we got, what people are doing from a volume standpoint, what we're doing from a technological standpoint, from a sales standpoint, from a marketing standpoint, we've never been more poised. We're not going to let up. It's kind of grow or die in here, Mike. That's kind of our deal in the corporate office. We are moving, and we appreciate all you do. I know Wayne's a phenomenal producer, so is Paul, so is Josh. Great guys. They train really well. They're personable. They understand it, and they communicate well with agents and clients. So I promise you to help. Grab your notebook, listen to what they have to say. Turn on my buddy.
Hey guys, thanks for tuning in to the Next Level Call. It's an honor and pleasure to be here talking to the entire country. I'm glad it's by recording. But I wanted to talk to you guys about something that was kind of brought to light to me over the past couple of weeks as I went through different trainings, and it's really how to actually show numbers in the house. I talk a lot very quickly and gloss over the fact that it's perceived value. Everybody says when value exceeds price, people buy, and run through how I show the numbers verbally. But until recently, one of my newer agents asked me to actually run through it, and then thanked me pretty extensively for running through it and how it kind of changed things for him. So hopefully it helps some of you. But here goes. So the first thing I'm going to do is top-down selling. So I'm going to start with, okay, folks, so the maximum amount that you qualify for is $250,000. So that's $250,000 worth of natural death benefits. Okay? And this is with Americo, our platinum carrier based in Kansas City, Missouri. not publicly traded, so they're not chasing a stock price or anything like that. So definitely a secure company, somebody you definitely want to do business with. 250,000 natural, so any cause of death, it's covered there. Plus 62,500 accidental, which basically means if it's an accident, slip and fall, car accident, anything of the nature, that it will pay out both for $312,000 worth of coverage. It also comes with a $62,000 500 common carrier death benefit for $375 total. Now, what that common carrier covers is anything that you pay a fare for: plane, train, bus, boat, anything at all. All three of them come into play, and it pays out $375, but $250,000 worth of natural death. Now, because it is life insurance, it comes with, and not death insurance, comes with some living benefits. Your critical illness rider, which basically means if you have a heart attack, stroke, major organ failure, end-stage kidney failure, ALS, anything like that, that you can access this $250,000 to offset any medical expenses, accommodate any new modes of living. If you're just not able to work in the same capacity, have to find a new job, maybe take a pay cut and can no longer afford the mortgage, as is, you can take out a portion of that to take a chunk out of the mortgage to make it more affordable based on what your new income is. Whatever you need to do, those funds are there for you while you're still here. The chronic illness rider means you have heart attack, stroke, TIA, that car accident that you don't pass away from, anything that leaves you unable to do 2 of 6 daily living functions without a significant amount of help. What those are: feeding, bathing, clothing, medicating, walking, or continence. Any 2 of those 6, you can again use that $250,000 to do things like make modifications to the house, wheelchair ramps, make it more handicap accessible, purchase orthopedic equipment to accommodate your new mode of living or whatever your needs are as a result. Anything at all. They're not going to question you. All you need is a note from the doctor citing that qualifying event, and America basically opens their checkbook for you. The third rider that's included is the terminal illness rider. Now that means if you're diagnosed with anything that gives you less than 12 months to live, then you can again access that $250,000 to take care of whatever you need to in the last 12 months. You want to pay off the house. You want to just take a healthy chunk out. You want to go visit family, family to you. Just create some memories while you're still here. Those funds are available to you. And then the other thing that people really like about this is the 100% guaranteed return of premium, which basically means that every dime that you pay into the policy is there for you on the other side in the event that you outlive it, to basically just put back in your pocket to supplement anything else that you set aside for retirement, for that retirement vehicle, retirement home, whatever it is, it's there for you. For all those benefits, you're looking at $312.86 for all those benefits, which basically means that in 30 years, you're 40 now, you are looking at a guaranteed return of $112,629.60. Again, to supplement whatever else you set aside for retirement. That's a $112,000 check that they're going to hand over to you for allowing them to protect your family and for outliving the policy. Now, what a lot of people do, because the average person does refinance their house twice, this ends up being something that they can use to pay off the house early. If not, then again, it supplements your retirement. Do you understand how that all makes financial sense? And then I just shut up and listen. And most of the times the pushback is on price. Again, this is top down. So from there, they have a $200,000 mortgage. The next one I'm going to go to, I'm going to ask them, first of all, okay, so what is it that you don't like about this? And typically it's the price. I'm going to ask if they like the return of premium, the idea of getting their money back, because I want to solidify the value there. And almost always it's the price. So the next thing I'm going to do is drop down to 100% of the mortgage. So $200,000 natural, plus 50,000 accidental, plus 50,000 common carrier. So just like the other policy, the first choice, the first option, $300,000 total, but $200,000 worth of natural death coverage, 50 accidental, 50 common carrier, all the same living benefits. The only difference is instead of accessing 250, you're accessing 200,000. For all those benefits, you're looking at $276.66, which in 30 years gives you a return of premium of $99,597.60. Now, is that a number that makes a little more sense to you, that won't have you coughing up blood every month when you see it show up on your transaction history? And they're going to say one or two things. They're either going to say yes or they're going to say no. And the reason I show one number, they'll often ask, is that just for me or is that for both? I show one number, a la Zach Luffles, because the last thing I want them to do is try to figure out how to fit two numbers into their budget. Then that's all kinds of math that's unnecessary. So what I do is on the front of my inventory sheet, they don't know what those numbers are, so I typically total them his and hers. I just show them one number. So I'm, again, just being quiet and letting them do whatever conversing that they want to about the price or what have you, until they say yay or nay. If that doesn't work, then I continue to go down. The third option, their mortgage is $200,000. I'll show them $150 and cover essentially 75% of the mortgage instead of 100% of the mortgage, because it still puts the survivor in a great position to maintain things. So that's essentially the approach top down. Now, so the other thing that I might do is write it all out. I wrote it all out for time's sake, but is show them three options. I'm just telling them, okay, folks, so what I'm going to do is I'm going to put together the three options that make the most sense for you. And I'm going to show you 100%, 75%, 50% of your mortgage. And then I'm going to write it out. And as I write this out, I'm going to talk them through it just the same. And then I'm going to move to 75% and just write it out and say, all the same things hold true here. It's just we're going to be accessing $150,000 of the natural death coverage in the event that one of these three takes place instead of the $200,000, and the same here. And then after I write all those out, I go back and write in the numbers, and then I just turn it around to them and say, okay, folks, which one of those provides you with the peace of mind that you were looking for when you filled out the form? And then I just shut up and listen, and they're going to pick one. And depending on the commentary, sometimes what I might do, and depending on the income, is tell them that, okay, what we can do is we can mix and match these too. So, Jim, since you're the breadwinner, and your income is almost double hers, we can cover you for 100% and then cover the missus for 100,000, just because if something happens, even though you're not quote unquote dependent on her income, I know it's not shoe money, and I know that her contributions to the household are immeasurable. And if something happens to her, you have to find somebody now to cook the meals, to do the laundry, to do things like that. And those things and that adjustment costs money. So we can mix and match those too. So the other thing that I want to show you is the mortgage payment protection, or as it's so affectionately called, the old people close. So one of the first things I do is I write the annual cost of the mortgage on the top of the sheet. And then as I go through the options, I'm focusing on what it actually covers. The 1 year's worth of mortgage payments plus burial costs and final expenses, which basically what that translates to for you, Mr. and Mrs. Smith, is $30,000 worth of natural death coverage, $30,000 worth of accidental, plus the terminal and accelerated death benefit, which essentially in the event that something happens to you and you're diagnosed with less than 12 months to live, it gives you access to this $30,000 while you're still alive to take care of whatever you need to in the last 12 months. You want to take a trip around the world, cruise, create some lasting memories, whatever that is for you. And for all those benefits, you're just looking at $262.38, which again essentially buys you $30,000, a $30,000 payout, plus preserves the $86,000 in equity for a total death benefit of $116,000. Do you understand how that makes financial sense and essentially prevents you from running from the funeral home to the real estate office? Because the last thing we want you to do is sit down at this coffee table or at this table tomorrow to have your coffee and Jim's not here. And in addition to all those memories flooding into your mind and you trying to process all those memories, you're also trying to figure out how you're going to make the mortgage payments for the foreseeable future. So this is going to help you bridge that gap. And then I'm just going to be quiet and listen and see what they say. And if that's not feasible for them, I'm going to move over and just chop it down to 6 to 8 months. The average funeral is $8,000 to $13,000. So that $8,000 to $13,000 goes to pay for burial costs and final expenses. And that leaves another $8,000 here to maintain the mortgage for about 6 months to allow you the opportunity to make a decision as opposed to being forced into one. Now, is that number a little more comfortable for the $106,000 death benefit? Because the last thing I want you to do is be worried about getting the AC fixed, especially here in Florida, or paying for the mortgage payment protection that's going to keep you in the house, God forbid something happened unexpectedly. And I'm just going to be quiet and listen. So that's essentially the mortgage protection, the mortgage payment protection, and the top-down selling, how I write all of those out and present them to the clients. The final expense is pretty straightforward. It's a lot like the mortgage protection. It's just the death benefit and the living benefits and the total at the bottom. Typically, there's no equity involved. I typically try to incorporate the beneficiaries when I'm presenting it, as far as the payout is concerned, allowing the beneficiary, allowing your granddaughter or allowing your daughter to make the arrangements necessary for your final expenses and your final plans, things like that. But it's pretty straightforward. Again, I'm just trying to fill the box as much as possible and give them as much eye candy as I possibly can so that they can make an informed decision and see that they really are getting a lot based on what they're putting out. Hey guys, I hope that helps and helps some of you navigate the in-home process and presenting numbers a little more effectively and efficiently. What I found and some things that I've heard in doing that is that they use those bullet points or those living benefits, the way it's written out as talking points, to kind of close each other and help each other better understand, because obviously they receive things differently, which is why we don't do one-leggers, so that they can both ask their own questions. And they end up closing one another. And I find myself saying things like, hey, that's my line, or that's what I'm supposed to say, because they efficiently or effectively close each other or close themselves. One of the other things that it does is it kind of sets you apart, because I can't tell you how many times I've heard them refer to the last agent that was in the house and how they understand it a lot better now, and how that person didn't explain those things to them or go through it in that detail, and allow them to develop the level of understanding that they have now. And just kind of as a I guess a talking point, when you're submitting the application or during this process, it's a great time to position ReliaShield as an added benefit to overcome some objections or to solidify the benefit of protecting their family, because it's a perfect time then, and if not then when you're navigating or submitting the e-app, when you're submitting for underwriting decision, it's a great time to talk through that process, because it's an easy add-on. And for those of you in states like myself, like Florida or Pennsylvania, where you don't have access to the full product, I'm pretty sure as of June 27th, and I'm sure Shawn or somebody will correct me if I'm wrong, that June 27th, the 25, 20, and 15-year return of premium will also be available across the country. So happy selling. If you have any questions, feel free to reach out to me via Facebook or Instagram or via email. I'm here to help, just like anybody else. Anything I can do, I will. And if I can, I'll direct you to the well that I found to gather the information that I have thus far on my journey. Happy selling, and I'll see you on the leaderboard.
All right, guys. Hey, Paul McClain here, Family First Life West Coast. We're going to go through the 8 steps to success in a final expense appointment. All right, so we're going to dive through really quick. Step 1, mind right. So you got to get your mind right going into the client's house. So before you step out of your car door, compartmentalize everything that's going on in your life, put it to the side, and for that 1 minute, visualize everything that you want to have happen while sitting with the client. Visualize everything, what successful connection, successful financial inventory, everything that we're going to cover. Step 1 is seeing all these things play out exactly as you wanted to play out, right? So get your mind right. Very important, right? If you don't have that right, none of the other steps make any kind of difference, because you might say the right words, but how you say it, right? How you say it is what matters. It doesn't matter what you say, it's what they hear. And that's going to be a direct result from you having your mind right, all right? Second step, who you are. So I build rapport, connect with the client. My second thing is I'm going to let them know who I am. So I'm going to say, Bob, Mary, listen, what I do is I feel done right. And so I'm not a sales rep that's captive. All that means is that we use a lot of different carriers, because every client situation is very unique and different. Meaning that I've had clients today, guys, that I've helped. Every one of them I've helped, but it's been different carriers. Some have been Mutual of Omaha, some have been Americo, some have diabetes, and this carrier is better. Some had cancer, and this one's better. And so we're able to basically look at the client's need, their health, and determine who's best eligible for a product. So I filled under and I can look at those options. The big thing with it also, Bob and Mary, is that these are state-regulated programs. So a lot of families I talk to, they say, Paul, we've looked for protection. We want life coverage. We know we really need it. We're not confused about it, but we can't find anything that's affordable for us. We can't find anything that's within our budget. And the good news is, because these are state-regulated options, about every family I sit with, guys, we can find a plan within their budget, which is great news. Okay, let me pause there. Why do I do all that? For one, a lot of what I'm saying is every client I've helped today, everybody I've sat with, I've helped today. So I throw that in there, which means that everybody wants to do what everybody else is doing, that whole herding concept, right? And so I'm letting them know, like, everybody I've sat with today, I've helped, which means that it'd be weird if I didn't help you. People want to do what everybody else is doing. The second thing is I take away the whole shop around objection by covering that in that way. We use all these different carriers, right? I also take away the whole thought process that, man, this guy's a sales guy and he's just saying stuff for his own good, not for me. I take it away by saying I'm not a captive salesperson, guys. I simply filled underwrite, and I can look at all these different options of carriers. So that's the other thing I do. The second part of why that's important. Third part of why that's important that makes a big difference is I'm proactively overcoming the fact that in their mind, they don't think they can afford anything. If they can't afford anything, they don't listen to anything I say. If they're convinced that what I'm going to show them, they won't be able to afford, it doesn't matter what I say, they're not listening. So I proactively overcome that by saying, guys, listen, most clients I sit with, they're looking for life insurance. They know they need it. They know they want it. But they're like, Paul, I can't afford it. I can't pay $250 a month, $350 a month. The good news is about everybody I sit with, Bob and Mary, that's on a fixed budget, probably maybe like you are, it's fixed income. About every one of them, we can find a plan within their budget because these are state-regulated options. So all I'm doing is saying, hey, it's okay. You can actually get a plan. We're going to be able to help you today. Budget's not going to be an issue. So I tear down that wall that they built up, that they're not really letting me on the side of the table where I can be an assistant buyer, because they've got this wall saying, hey, we got to guard ourselves because we don't even think we can afford this. So we don't want to get emotional when you ask the questions. We want to answer in such a way that's off-putting or it makes it seem like we don't need anything. I break that whole wall down, so there's now a vulnerability between me and them, which is how you can close a deal, because this is an emotional sell. And if they're not willing to let that go and start seeing this as something that they desperately need, and answering the questions and visualizing what it's going to look like, you're not gonna sell it. Because the two main things to closing, helping families is building building value. When value exceeds price, people buy, right? And then also being assumptive. So that helps break that down. So a lot point two, you can say, that seems pretty simple. I want to tell you why I'm doing what I'm doing so you can see the benefit of that while I'm sitting with the client. It's very important for me to do that every single time, okay? So point three, the reasons why. All right, so I say now, guys, listen, most families that send this request back in, basically everybody I sit with, it's one of three reasons, or sometimes it's two, or sometimes it's all three. Most people that send this request back in, it's either because they want to make sure that when they die, their final expenses are covered, their burial expenses. So if they passed away tomorrow, they know that, the first thing that they're going to have to think about is how do I bury my spouse? What does that look like? And guys, I've done this quite a while, and I could just tell you the last thing that you want to think about is when they wake up and they're going downstairs and they go back and their spouse is not moving and they're no longer there. The last thing they want to think about when the next morning they wake up and they've got to see their spouse's coffee cup where it normally sits and everything they become accustomed to, every bit of their daily routine and rhythm of their day is now forever different because their spouse is no longer there. The last thing they want to think about is, oh shoot, how do we pay for these expenses? Oh my God, what do we do? Who do we call? How do we get the money? What does that look like? They want to just know that it's taken care of. And so one of the most important things and number one reasons most people get protection is for that, to make sure that when they pass away, the burial's it's gone, it's taken care of. Because that's one of the only things you got to think about right away. Day one, you're thinking about that. So the second reason why most people look at the protection, send this request back in like you guys did, is income replacement. And this is really a big one because, most clients realize that the income that they're on is pretty fixed. And so when their spouse passes away and that Social Security, drops down, right? Bob, if, client's making $2,000 and Mary, you're making $800, that $800 is gone. They want to make sure for a period of time, the last thing they want to think about is how to adjust their budget, how to figure things out, how to get by each month with a different type of income. They want to be able to mourn, to grieve, to recover, to move forward in a healthy manner. And so one of the main things as far as why most people get protection life insurance, it's to replace income. That might be for a year, 6 months, 2 years, whatever that may be look like, but they want to replace that income, bridge the gap, and get through that. The third thing some clients are looking at that might already have protection or whatever is they want to look at leveraging their legacy. And all that means is that they say, Paul, listen, when I pass away, I want to leave something for the grandkids or the kids' college funds or to put them in a better position. Or some clients will say, we've got X amount in savings or we got X amount disposable cash that just kind of, we either blow it or it goes into savings. We want to leverage that. So if we can take that amount and leave this amount tax-free when we die, why would we not? I mean, we're not going out and buying a new Lamborghini tomorrow. We want to leverage that. So those are the three main reasons why most people fill it out. Some with all three. For you guys, was it more for the final expenses, income replacement, leveraging legacy, all three? What was of these three, which ones are the most important for you guys? So it's not is this important or why did you fill this out? No, I'm providing the options, and this is what everybody's filling it out for. There could be no other option but that for the most part. What's most important to you? So I'm already going through and attacking the why right after I've overcame all those objections proactively, guards down. Now I'm going and bringing up the why, the three reasons why they would fill it out. Now, as you can see, I'm not just saying final expense, income replacement, leverage legacy. I'm not just saying those are the three reasons. I'm describing why each one of those is important by painting pictures. Like when I say final expense, that's the first thing you think of. You don't want to think, oh God, what do I do? The second thing is income replacement. Last thing you want to think about is how do I adjust my bills? What does that look like? I'm painting the picture of what it's going to be like. And I'll say, Bob, Mary, listen, the one thing that's probably guaranteed is that one of you is going to be here without the other. Odds are slim that you guys are going to die like the Notebook movie, snuggling in bed, and it's going to be somebody's going to walk, oh my God, how cute, like they're both gone. One of you will still be here. This is what's going to happen. And so I'm painting that picture already. I'm starting to develop that. All right, now the next thing is this. 3 things that I want to accomplish. So I'm going to say now, they'll say final expenses and income replacement. I say, okay, got it. Now guys, 3 things that I want to accomplish. My goal is pretty simple. For one, I want to make sure if you can absolutely afford, not afford it for 1 month, but every month it's sustainable, because no matter how important this protection is for you, if you can't sustain it, if the plan's not here when you're gone, there's no value. So I want to make sure it's sustainable because it's that important. So affordability. Second thing is I want to make sure you can qualify. I mean, guys, it makes no sense to go through all these different options, and at the end of the day, the company comes back and says no, and you can't get it. Or it looks really good, but you can't qualify because of health. So I want to make sure the plans we look at, you're qualified for, you can qualify for, that you can actually get the protection that we're looking at, because it's that important. There doesn't need to be a head fake. Third thing is to make sure you guys understand it, because at the end of the day, this is the most important thing you can have in place for your family. And so when something happens, you want to know exactly what that's going to look like when you're gone. And it needs to be clear. You don't want to be the client that has protection that they're like, we're good, and it's only accidental death. When they die, they find out that it was not an accident, so there's no protection. So we want to make sure that you know exactly what you've got in place. Does that make sense? Yes? Okay, perfect. So those are the three things that we want to accomplish, because it is that important. So that's the next step. So that's step 4, right? So step 1, mind right. Step 2, who I am. Step 3, the 3 reasons. Step 4, the 3 things that I want to accomplish. Okay, so let's move on now to step 5, the process. The process, and I say, does that make sense about the 3 things I want to accomplish? I say, yes, absolutely. So now, listen, the process is really simple, guys. This is what we're going to do. Once we find a plan that's a good fit, I can't make the decision for the company. I wish I could, and most clients do as well, because it's that important. But what I can help you do is see if we get you qualified. And so what we're going to do is, once we find a plan that's a good fit, we'll send in a request for coverage, and we'll see if they're going to come back and say yes or no if it qualifies. If they say no, you don't have to worry about it. Sometimes they do, because we're going to go for the lowest risk. They do. You've got my word. I'm not confused on how important this is. I'll make sure we find a plan that will come back and qualify it. Once we find out that it's qualified and they say yes, we'll have 30 days to adjust it up, adjust it down, or just kind of leave it alone. But that's the process, and that's what we're going to do, okay? Okay, great. So trial closes, letting them know what to expect, what it's going to look like, and now we're just taking steps forward within that process that I just articulated. Okay, so that's the next one. Financial inventory. This one's big, and so I'm going to do a whole training on the financial inventory. But the thing is this, the financial inventory is crucial, because this is where you paint the picture. In fact, when I talk to agents that are struggling in the home, typically it's simply because they're not going through every question in the financial inventory. So I'm not going to sell you on why to go through it and all that. I'm just going to say this. If you don't go through it every time, you're definitely missing out on thousands of dollars every month and money you're leaving on the table from annuities, if you don't ask about that, right? You're missing out on helping the family, because that's the value builder, is a financial inventory. Every one of those questions is painting the picture. When I say, Bob, what's your income? Mary, what's your income? What kind of life insurance do you guys currently have in place? You don't have any life insurance, or you do? Okay, go ahead and get the life insurance policy out, guys. It'll save 20 minutes of underwriting questions, because I can see how they underwrite, what you guys qualified, what risk class. So grab that, because you will want to save time. I do, you do even more. So grab that, and I'll look at their policy. I'm just painting the picture. This is what you've got in place. This is what it looks like. Can I find premium with the policy they've got? Maybe they got something in the mail, and they don't have cancer, and that policy was in place or underwritten with no medical questions, guaranteed issued, and the price is as if they do have cancer. So I'm trying to figure out how I can best help them. Every one of those questions, it paints a picture, paints a picture, paints a picture. What do you have in place that acts like life insurance when you pass away, that's going to be left to your family for income replacement, legacy, or what have you? What does that look like? That's how you find annuity money. That's how you can identify money there, right? So I'm going through all those questions. Health, what does that look like? Every time I ask a health question, they say, I got this, or I had this, I had that. It's bringing mortality into the equation. They're starting to see like, hey, I'm not the healthiest guy out there, right? I've got stuff going on. So the financial inventory is absolutely critical. It's crucial. You've got to go through it, right? Do you own a house? Do you have equity in the house? That's another value proposition, because you can start talking about protecting the equity by covering so many mortgage payments, right? Even if it's final expense, right? If they have a mortgage, you can talk about the equity conservation that they've got. So you want to go through all those questions. Now, once you've gone through all that, you've painted the picture. Now, this is where your close ratio goes through the roof. This is where you protect almost every client you sit with, is when you say, Bob, when you pass away, that income, and now when you pass away, that income of $3,500 a month, it drops down to $2,000. Mary, what does that look like for you financially as far as covering the bills, taking care of everything when Bob doesn't come home, when Bob doesn't wake up? How does that impact your ability to take care of everything? What does that look like? How do you cover expenses? How do you pay the bills? And I'm asking the question with sincerity. This isn't like a question like where I'm trying to say, it's not a manipulative way or it's me trying to like say, hey, see, you really need this. It's me sincerely saying, like, what does that look like? This is a situation for you guys. And guys, every situation is different. But for you guys, this is what's going to take place. What does that look like? How does it impact you? Now, when I ask that question, every second in silence that takes place now from that question being asked and for them starting to answer it, they're living in that picture that I painted with the financial inventory. And the longer they live in that picture, the greater the value becomes. The more they know they need it, the more emotional they become. And I'm telling you, emotion drives motion, right? People make decisions 100% of the time based off emotion, and then they try to find logical reasons to support the emotional decision that they made, which is why you got to make this an emotional sell and also a logical sell. You get them all crying and emotional about it, and then you show them a price for $500 a month, and their income's $700 a month. There's no logic behind that, right? They'll cancel it within 32 minutes if you leave it. So it's both. But those questions make a difference. And what does that look like? Would you have to move? Would somebody have to come in? Is there really no answer? You just don't know. You might you have no clue. What does that look like? And so those are the questions that make a big difference. And see, it's an uncomfortable question in the beginning. You do it over and over again. It becomes like no big deal. It's just rhythmic. It's just a part of your normal. But in the beginning, you will not help the amount of families, and your premium will be lower and everything will be minimized if you don't ask the right questions. If you don't let them live in silence when you ask that question, okay? So financial inventory, big deal. Number 7, so quoting. So, I kind of have an idea of what their income is, and I'm not going to show them like $400 a month, $300 and $200 a month if their income is, final expense and they're making $900 a month. That just doesn't make sense. So I might show them if they make $900 a month and I kind of have an idea of what their bills are. I might show them $175.50 if their income is real low. I'm going to, if it's $3-4 grand, I'm more income, like maybe they make $4,000 a month. I might show them $225, $175, or $130. So I kind of gauge that, and that's kind of how I'm going to show the options. But I got to be cognizant of what their situation looks like and kind of make sure my 3 options are within range, so to speak. The close. Remember when I said if you've got a good why and you're assumptive, those are the 2 things that will skyrocket your close ratio. So this is an opportunity now where you got to show that assumptiveness, right? And so I've showed the options, and now the close, point number 8, I'm going to say, so listen guys, we can't make a decision today because I don't know if it's going to qualify. But if we were to qualify, which one of these options do you think would make the most sense based off of budget and based off of protection? And I show them the options. They're going to say, I think that one would work the best. Okay, perfect. Go ahead and grab your driver's license. We'll see if we get you qualified there. We can always tweak and adjust it later. They grab their driver's license and it's done. And so that's the 8 steps to a successful appointment, right? Step 1, again, mind right. 1-minute goal setting. Step 2, who I am. Step 3, the 3 reasons why families fill this out. Step 4, the 3 things that I want to accomplish, my goal of being there. Step 5, the process. Step 6, painting the picture, getting them to live in the picture, the why, the value, the financial inventory. Step 7, quoting. Step 8, the close. So I hope this stuff helps, guys. Make it a massive week, and we'll talk to you soon. See you.
Hey guys, Josh Rose here. I am out of Charleston, South Carolina. First and foremost, I want to thank Shawn, All Family First Life, for letting me be able to hop on the next level call, be able to give back to you guys for a couple minutes. It truly is an honor, and I'm very humbled to be asked to be able to give back. Also want to thank everyone else along the way who's helped me get to where I am. Athena, John, Wetmore, All Family First Life Southeast, Zach T, Luffles, You guys have no idea how much you've helped me grow, and how much I've learned from all of you. So I really appreciate everything anyone's ever done for me, and everyone else out there throughout the country. I steal everything from everybody, and I make it my own. And that's the great thing about these calls, is you can get one little nugget and implement it into your schedule, and it can make you thousands and thousands of dollars. But just a little background about myself. I moved to South Carolina from New York in 2011. Started working at a bank. It was my first job out of college. I hated it. I just sat at a desk. It was boring. I'm way too ADD to be sitting at a desk for 8 hours. And Athena, I've known her for probably 20 years. We're from the same spot in New York. She was with a different deal and insurance company, kind of different than FFL. And she showed me the leads, and I was like, I wanted to get into sales. So when I saw the leads, I was like, well, I'm going to start doing this. So I got my license. I think it was spring 2012. I was part-time for a little bit, then went full-time because I quit my job there and moved to Charleston. Athena was here, so I wanted to get around to her and learn. But we were with that company for a couple of years. The comp was at like 40 to 55% starting out, so it was super hard to make a living. So I'm so thankful and so blessed that we have Family First Life now, because it's so crazy how much better it is. Like it was not good over there with just the comp. It was just hard, and the training we have here, free training, all of that, thank God. So I'm very fortunate. I did learn a lot when I was there, and I'm thankful. It was a learning step, but I'm very thankful now that Family First Life. And I've been here since 2014, and every year it's gotten better and better. So thank you, Shawn. Thank you for always evolving and growing the company, because it's only going to get better. And I'm very blessed. This is the best way to make money in America. So I just wanted to touch on some things that I do in the home that have given me success throughout the years. And it's important to always evolve as well. So not do the same thing over and over. So if you get stuck in a rut, find something and implement the change. So these calls are important to do that, because you can get a little nugget and change things. So starting off, I think it's important to feel good. And you feel good, you think clear, you're more confident as well. So every morning I wake up early. I'm at the gym, around 5:30. I'm at the gym. I work out, get a good workout in, and then Mondays and Thursdays I'm at the office. I'm dialing till my schedule's full, and whatnot. So you feel good, act good, perform well. I have better energy when I do that, so that's just important for me to start the day off like that. So Mondays and Thursdays making the appointments, and then I'm in the field on Tuesday, Wednesday, Friday, Saturday. My lead flow, right now I'm probably about 70% final expense now compared to years past. I was mainly mortgage, so I'm getting probably 75 to 100 Facebook leads a week. I have several different counties locked out for mortgage protection, and that's that can fluctuate. And I just started doing the Mail Pro drops with Sasha, and I've been killing it with those on the ones that I've gotten. I think I've gotten 8 leads, and over the weekend I've written 10,000 on it, 4 appointments so far. So I would I would highly recommend starting those as fast as possible. So that's kind of my lead flow mix. I'll mix in EverQuote too when I need to, and then the CRM, and mainly just making sure you dial until your schedule's full. So also what I do, just something to keep in mind, when you're out in the field, before I go out, I like to have a cooler packed full of food, like healthy food, so I can eat and not feel bad about myself, because if I eat fast food, I'm going to feel like crap, and then I don't want to be feeling lethargic when I'm with clients. So I like to have a lot of energy. I think it shows confidence and whatnot when you're in the home, and people want to do business with people who are confident and whatnot. So I think that's huge. That's for me. Whatever works for you. When it comes to like in the home, I think the best, like what you need to be yourself. You can't try to be, people will sense if you're just trying to be fake and just trying to, get a sale. You've heard it a million times before, they sense when you have commission breath. But when you go in there and have an attitude of truly just wanting to help people, it really shows off. So when I get into the home, I always ask if you want me to take my shoes off. I shake their hand. I'm wearing a polo shirt, and in the summertime it's 100 degrees out here, so I'll wear nice khaki shorts and some nice nice shoes. So I'm just a regular guy meeting with regular people because that's what they're wearing. I meet them where they're at. We go to the kitchen table. I go through everything with them. As far as rapport, I build it throughout the appointment, but if I see something I connect with them on, I connect with them. So for instance, like I have a dog. So if they have a dog, the first thing I do is I whip out my phone and I show them a picture of my dog. We talk about dogs. So, and my dog's really cute, so everyone's like, oh, she's so cute. So I think that's instant rapport builder. If you don't have a dog and you like dogs and you have time for one and someone to help you with one, get one, because it definitely helps build a connection. And I'm also big on humility. So I'm single, I'm 32, I don't have any kids. I'll be like, yeah, I'm 32, no kids, just a dog, I'm just a dad dog. But I'll also make fun of myself throughout the appointment too, if there's, times when I can, and whatnot, because it lets people's guard down when you can just be yourself and have fun with it. So as far if I don't have a connection with people, I don't try to make an unforced connection. It's just weird and it's not comfortable. And with final expense appointments, I'm typically just gunning right into business. And if I can connect with them about the dog, I will, but I'm not building too much rapport, but I'll talk to them throughout the appointment. So I think that's huge. Be yourself. You are who you are because of you. So be confident in yourself, and it'll show. It's huge to be confident in the home. And if you're not, just do affirmations, read books, work out, make yourself feel better, and it'll show off in the home. But really meeting people where they're at and being very structured in the home. So I typically, will go into everything. I'm very structured in regards to, telling them what I do. I work with Family First Life. I represent about 20 different A-rated insurance companies. They're all state regulated. I specialize in mortgage protection, final expense insurance, retirement income planning, and we also now do identity theft protection. I added that in because I need to sell more Reliant Shield. So I just added that in. And then I just tell them, here's what we're going to do. I'm going to go through a bunch of questions with you in regards to your finances, a couple minutes on your finances, a couple minutes on the mortgage and your health, and any insurance that you currently have. And then I go into the financial inventory and I ask them all the questions on the financial inventory sheet. Final expense or mortgage, I'm going through the financial inventory. I'm not going to train on that today. Listen to Linda Lampasso's training on that because that's the best there is, because it eliminates the objections that can come up. But the main thing though that you need to focus on if you're new, and I've seen a lot of new agents, and I struggled with in the beginning because it's the most uncomfortable part, is getting the why out. That's where the insurance is sold, guys, and that's these people filled out a form or they went online. For direct mail, 98.5% of people throw them out. We're dealing with the 1.5% of the population who fills them out. They need the insurance, okay? They wouldn't fill it out if they didn't. But our job is, agents and, field underwriters is to bring out, we know they need it. We need to bring out why they need it and what it's there to do. So you really need to paint a picture and dig deep when it comes to the why. Don't ask, why did you fill this out? That's a bad question. If it's mortgage protection, I'm assuming you took the time to fill this out to make sure that, God forbid, one of you don't make it home from work one day, that you're going to be protected. If they're older, I'm not going to say pay off the house, because if they're in their 70s, they're not going to take out, they may, but most of the time they're not going to take out $200,000 worth of coverage. So just tailor the way you ask the questions when you're in the home to get the better answers. But then you need to drill deeper, and you can't just stop there. You have to just go layer by layer and just figure out what's going to happen when they die. Where are they going to go? Who's responsible for it? Do you really want to move in with your parent, or would you really want to have to move in with your kids if he dies? What are you going to do? How are you going to afford to stay here? There's you just have to drill deeper, and if they're not giving you answers, you just keep going. So just dig deep into their why, because that's where the insurance is sold. And that's your ammo too if they give you any BS at the end. So that's huge. For final expense, it's just most of my families I sit with, they're looking for coverage because they currently don't have any, or what they currently have is not enough, or they're looking to save some money. What do you typically fall under? And then just go into it, then dig deep. Okay, if they don't have anything at all, who's going to pay for it? What's going to happen? You really want to be a burden on them, but just the quality of your questions will determine, the quality of your life, and especially in this type of profession, just dig deep. That's my biggest advice. Athena has helped me, because at first when I first started, I would just ask bad questions, and I didn't dig deep because I'm not an emotional dude when it comes to that type of stuff. Well, Athena, because I've worked with her for so many years, she helped develop that, to drill deeper and get the best questions out, and that's your ammo to go back to. So that's huge. And then just helping them out at the end, sell so much value. I use the Americo 10-point sheet when I'm selling cash back. It explains everything to them when they're getting their money back. It's the easiest sale to make. Living benefits, all of that. That's just value. When value exceeds price, people buy. So I go through that with them, and then typically I'm just from a budget and protection standpoint, what makes the most sense for you, and they pick one. So that's typically just some in-home points. Just go through everything, ask a ton of questions. The why is the biggest part, and then once you figure out what they qualify for, do good at explaining it. If they're eligible for the Americo cashback, use that 10-point sheet. If it's payment protection, with whole life, get really good at explaining, what it's going to do for them. Paint a picture of, that it's going to protect the equity. Matt Smith does a great training on that. How long they can stay there. It's going to protect their equity and whatnot. So that's huge. Just get really good at explaining those things. And throughout the years, I've gotten pretty good at persistency, which is keeping the business on the books and keeping more money in your pocket. And at first, I was bad. I feel like everything I wrote when I started off chargeback, and chargebacks, they stink. Throughout the years, I was always looking for ways to improve on that. And I remember asking Mark Meaike a question years ago about what he does and whatnot to keep things on the books. And I remember the way I interpreted it was him selling himself on what he's going to do for their family when they need it most. So I stole that, and basically so after I make the sale, I go through and tell them exactly what we did. If it's the Americo HMS with living benefits and cash back, I'll be like, okay guys, you're gonna get your money back. You'll get your money if you ever need to if you're critically or chronically ill, heart attack, cancer, anything like that. We're gonna get your money. You call me. That I'm gonna get the money as fast as possible for you. You get me the doctor records. We're gonna file the claim and get you that money. God forbid you die, I'm going to be the one helping Mary get the money as fast as possible. That's my job. That's when my value comes into play. So make sure you always have my number, okay? If you ever need to make any changes, you call me. So I'm selling myself after I help them and making them aware that God forbid when they do die and they need it most, I'm going to be their guy, okay? And I tell all my clients, you're stuck with me for life. So once a year, I'm going to do a review with you and come out and go through everything again. And I tell everyone that. So I'm selling myself after, but I'm very clear with everything after the sale is done. So what I'm doing is I'm going through everything, and I'm telling them when it's going to draft. It's going to draft on approval, okay? it's the $150 a month it's going to draft. If we did America and got them approved in the House, I'm going to be like, you're going to see it hit your bank within probably 1 to 2 business days. And whatnot, and I'm leaving all that written out with them. I leave the Americo sheet with them. If it's a whole life or whatever, I'll write everything on the back of my card for them. So I'm just very clear in the expectations of what's going to happen next. And I also tell them, when you get your policy in the mail, call me. We can go over it over the phone, or I can come out and go over it with them. I tell them that because I travel. I work in 3 different states. Most people never call you to come go over it with them, but if they do want you to, do it. So that's been huge for me to keep things on the books. When they're not approved in the home, I call them and let them know they're approved as soon as it's good to go. And then what I do is I send out postcards to everybody. It just looks a little something like this. If you guys want a copy, just shoot me a message on Facebook. But I do that to all my clients. And ever since I did that, it's crazy. I've saw my numbers, stay on the books, and whatnot. But that's all I got for you guys today. I really hope that helps. Thank you for having me on the call. If anyone has questions or needs anything, give me a call. Thank you. Bye.